Welcome and happy holidays. It's hard to believe that we're approaching the end of the year already. This year has gone by so fast. During this time period, it's important to remember there's two housekeeping items that we would like to remind everybody about. The first one is that the IRS recently published their new contribution limits for 2026. So please remember, for all those who are actively contributing to retirement plans, to let your payroll department or your HR department know that you would like to increase your contribution limits to the new maximums. The new maximums are $24,500 for individuals under the age of 50 and $32,500 for those over the age of 50. The other housekeeping item that we'd like to remind you about is tax loss harvesting. We are proactively looking at all of your portfolios to see if there's any opportunities where we could recognize tax losses for you for this calendar year. The only issue with this is that we have been fortunate to have several years of really big market performances. And so a lot of these holdings have big gains in them. And so the opportunities for tax losses are a lot smaller this year than the years past. The other big thing we'd like to talk about today is that with the markets nearing all-time highs again, is we're getting lots of questions about the markets and the economies. Steve, would you like to share some of your thoughts with us about that?
Sure, I'd be glad to give our economic outlook. Currently, what we're seeing is moderate growth in terms of our gross domestic product. It looks like we're going to come in line with what the Federal Reserve expected at the beginning of the year, which is about 1.9%. We are paying attention to continued inflation pressures and also a slowing labor market. It is stable, but it is slowing. So we're keeping our eye on that. In terms of the next 6 to 12 months, I call it our crystal ball. And what we're seeing is we are optimistic. We do think there's going to be a fair amount of volatility, but we do see spurred growth because of monetary policy. What I mean by that is, the easing of rates by the Federal Reserve. In addition, I think that we're going to start to see some efficiencies from artificial intelligence in terms of playing into revenues and corporate earnings. And then finally, and most importantly, I would say we continue to see the resilient consumer demand. So people continue to spend, and we're really encouraged by that.
Thank you, Steve and Frank. One area we always have questions on is estate and legacy planning. At W3, we frequently review your beneficiaries to make sure everything is titled correctly. One item that is constantly overlooked is your outside checking and savings accounts and also real estate. If you have any questions on updating beneficiaries or transfer on death designations, please let us know and we'd be happy to help. Shelby?
Thanks, Andy. One thing that's especially gratifying as advisors at W3 is working with the next generation. So sons and daughters and nieces and nephews, and it really is rewarding when we get to sort of set them on the straight and narrow for the long term so that their future will be a little brighter, hopefully.